Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is April 15th, 2013. This is your intra-week update. Big news today, I should say unfortunate news. I just wanted to say, first of all, my heart goes out and my heart and prayers go out to those who are injured, to their families as well, and those whose lives were taken from the explosions at the Boston Marathon. It's a very sad thing, and it's hard to talk about the market and making money within the market based off of something like that that could have and probably did contribute to the sell-off of the S&P 500 today. But I promised all of you that I would create an update video when something like this did happen, and so this is the video that I wanted to talk about. It is not, how should I say it? It's not something that I would be excited about simply because of the bad news that followed, or the bad news that was the cause of the possible sell-off. But I just wanted to give you an update on the SPY. Just as I promised. So in any case, this is the SPY, which is the ETF that tracks the S&P 500, and today we had a huge sell-off, down $2.68. As you can see here, the volume was very substantial here. It was almost as high as and the highest volume that we had on this candle as well. So this candle was actually almost as big as our previous big down day candle, of which I thought that we would actually get a breakdown from this bottom trend line, but that obviously didn't happen. On this trend line here, though, we did get a breakdown and a close below this trend line, but we got the 154.10 and the 50 moving average lurking right under it. Again, if we can get a confirmation, well, let me delete this line here. Again, if we can close below the 154.10 level and validate that, then I'm pretty sure that the 149.51 will be probably our next stop. But that's something that we have to be aware of, and again, there's a lot of federal manipulation, so be aware of that as well. I am currently short by buying the SDS, and I do already have a break-even stop, so in case this does go against me and goes higher, then I'll get stopped out break-even, and I'll just wait for the next entry on the short side. I've been saying that the market has been tired, and it's due for a correction, and I'm just waiting for that to happen, and I obviously want to be on the right side of the trade when it does happen, which is why I'm looking at more shorts than I am longs, even though the trend is still up and there's nothing saying that the trend has changed just yet. A trend change would be a valid close below this candle here, which would indicate a signal of a trend change. And what I mean by that is, let's just say we come down here and we get a bounce, and then say we come up maybe around this place over here. This is how you know the trend has changed, simply because we have a lower high and a lower low, and that's all you need to validate that the trend has changed, but that hasn't happened yet. So just keep your eye on the following days. The next day, which is tomorrow, if we get another close below this candle here, that'll show a lot of weakness in the SPY. Let me just move this line over here to connect these 2 points over here, and so there is a potential that we could actually come all the way down here, and a close below this line here, this bottom trend line, would be a validation. But at this point, I'm just going to say that you know, just look at it this way, and then we'll see how it goes. Well, we could actually technically do it this way as well. Again, just be aware that we could actually get an initial bounce here. The Dow hasn't made the 1500 mark that the news channels has been saying all over the place to get people buying in, and so institutions can sell to the retail traders. So there is a possibility that we could get a bounce on the SPY. So again, if we get a bounce on the SPY, then so be it. I'll get stopped out break even, but if we continue lower, we must close below the low of today. Okay, that's very important. Now gold, the GLD, which is the ETF that tracks gold, had another huge hit today, down $12.64, which is 64 cents, which is a huge hit. I will be very interested in picking up some gold if let me switch here. There we go. I'll be very interested in picking up some gold if we get into the 127.80 level. And the reason why I say 127.80, let me load my drawings here, of which is not available, not the drawings that I had previously. In any case, we have this pivot here, which is the low of 127.80. Okay, so this low here is 127.80. I think gold could probably get down here, um, possibly get all the way down here, which is not too far away. Okay, so it's pretty close. If we get another push down there, then I would potentially pick up more gold on the long side. I think this area right here is a lot of consolidation, which would hold for a lot of support. The next support level would be here at the low of 113.08. I think that's a little bit too low for me in the year 2010, but you know, anything's possible in the stock market. I'm just not going to wait that long. But I mean, if tomorrow for whatever reason, you know, all hell breaks loose and we actually gap down into this level here, then you can be pretty sure that I'll be picking up some shares of the GOD on the long side. But for now, I'm gonna concentrate on this level here, which is the 127.80 level. And if we get a close below 127 flat, then I will probably stop out for a short loss, or I'm sorry, for a small loss. So that's my analysis on the GOD, and that's my position that I'm waiting for. So while everybody's shorting the GOD, I'm looking to already go long the GOD. And when I go long the GOD, it's just going to be for a swing trade, and it'll be for an in and out move. So I'm not, you know, permanently in the market for a long period of time. I like to play the short plays, and you know, not have to worry about holding on to anything, because when you hold on to stuff, your capital depletes really quick. Let me just give you a quick example of how I use my capital. I try not to use more than 10% of my capital, simply because I will not lose more than 10% of any stop. Normally, I'm way under 10% as far as my stop out goes, but at maximum, my stop out would be at 10%. And just to give you a better perspective of how that works, let's just say, for example, you had $100,000. Okay, so 10% of that $100,000 in any one trade would be $10,000, and so you could initially buy 10 different stocks if you know you were going long with $10,000 each. And that protects you in case of some sort of crash, or the stock goes out of business or whatever. If you invest a whole 100,000 into one stock, then you're putting all your money on just like one hand in a card game, and that's really not the smart thing to do. Again, this is a business, and you have to think of it that way. 10% of $100,000 is $10,000. If your stop is not more than 10% of $10,000, which is $1,000 of a loss, then you will only lose 10% of your $10,000 investment. However, that $1,000 10% investment of your $10,000, I hope you guys are keeping up with me on this, is only 1% of your $100,000 capital, which means in any trade that you make, you should only be able to lose 1% in each trade. You see what I'm getting at here? 10% of your capital can be used towards any one stock, and again, you don't have to do the whole 10% either. Okay, it's just like that's my standard. Sometimes I'll go half, sometimes I go 5%. Really depends on how good the technical analysis looks at that time. And again, I won't lose more than 10% of that, so it's only $1,000. $1,000 is 10% of 10,000. But if you really look at the big picture, it's just losing 1% of that $100,000. So I hope you guys followed that. So let's take a look at the dollar. All right, this is the chart of the US dollar, and again, we didn't get much of a move on the dollar, simply because the sell-off today was you know, multiple things put together. But essentially, the dollar had an up move, and again, it's inverse to the market, and therefore the market had a down move. It just was a gigantic, huge down move. Okay, but like I've always said with the dollar, it's not penny for penny, or even sometimes tick for tick. It's just in general, if the market is up, then the dollar will be down, and there's an inverse reaction to that. Now, if the dollar sees any type of resistance here, then we should see you know, a small pop in the market, but it looks like the dollar is already heading to the upside, or it could possibly be consolidating above the 50 moving average for another down move into the 20 moving average. But we'll take it day by day, and right now what it's looking like is that it's heading for the 20 moving average, which could give some resistance, in which case we should get a reversal on the market. Now let's go back to the market real quick. Alright, something to think about. This is the daily chart of the SPY. Because the move was so big today, I wouldn't be surprised if we got some sort of dead cat bounce tomorrow. You know, a lot of people are buying the dip, have that buying the dip thinking, and that could potentially be it. But here's the thing: if we get a close above at any time of this week, a close above, it has to be a close now. Above this red candle, then that's pretty bullish to me, and there's a potential that we might have another higher high. Okay, so just keep that in mind. But as long as we stay within this long bar over here and we never close above it, then it's still going to be bearish for me, and I'm going to look for the valid move below this bottom trend line here, in which case I will be looking for a trend change. Again, I have a break-even stop. I'm already in the money, therefore even though this does go against me, I won't have any issues about losing money. It's just not making money is probably an issue for me, but not losing money is actually, like in any business, the one thing that you want to be concerned about, including making money, but not losing money is the first thing. So this is your weekly or intra-week update, and I just want to make it clear to everybody that even though this down move does look pretty exciting and it did happen on high volume, just make sure we also had this here, so it's not unfamiliar to see it bounce off of this trend line here. Okay, and we are into this bottom trend line here, so we could potentially get a bounce. If not, and we get close below this bottom candle here, then that should validate the move. We might get a bounce off the 154.10. That's not out of the question. As long as we don't get a close above this red candle here, I will remain in the boat, or whatever you call it. I will remain thinking that this market could turn and start heading lower. Okay, so just keep that in mind, and for the rest of this week, just keep that in mind. I did say that this week would be a volatile week. I just didn't think that Monday of all days would be this volatile, and it's due to I believe unfortunate circumstances that happened in Boston. And again, it's really hard to talk about making money while it was because of a situation like that. So it's just something that we need to see. Now I'm gonna do something that I normally don't do in my videos, but let's check out the E-mini futures. Okay, so this is the after hour E-mini futures chart. Okay, and this is the black part. If you notice from the Facebook pictures that I've been posting, and again, if you're not on my Facebook, then you will not get the intraday updates that I do give. I pretty much talked about this on the intraday on Facebook, so the people who liked the Facebook page can see these updates, I think. And if you guys rather me create a group instead of having a page, just post in this YouTube comment, let me know, and I'll create a group instead. I really don't honestly know what the difference is, but there might be, and I can easily change that. It's not a problem. I only got like 8 likes on that page anyway, so it's not really a big deal to me. But just to give you a quick example, the information that I'm providing you in this video now was also on my Facebook earlier today, so you probably would have got the news a lot sooner. So what are the E-mini futures? The E-mini S&P 500 index futures is basically a good indication of what's to come. Now it's hard to see what will happen tomorrow based on the E-mini future, simply because pre-trading or pre-market tomorrow, before the market opens, a lot of things can happen as far as the E-mini futures go. But it can give you a pretty good idea if you look at the E-mini futures of what's the market will open at based off of the E-mini futures. I hope that makes sense. But in any case, we had this big drop in the E-mini futures while the S&P was dropping. Okay, so that makes sense, right? And then now after hours, the E-minis futures are trying to recover. This is the 10-minute chart. The gray part is the after hour section, and right now it's up $7.75. Previous to making this video, when I first started, it was at $8.25. So it looks like there is a push higher, but just mind you that the S&P was down another I think it was $4.34, combined with the after hour report. The SPY was actually down $4.35 after hours, in combination of the daily down. So what I'm trying to say is it's looking pretty weak, even though the E-minis are trying to recover. Normally you'll see like a plus 20 or something like that when you see a dramatic move in the E-mini, and that normally would stick for the next day. But right now it's only up $8, so it is sort of bullish. We may get a small bounce tomorrow, but I guess that remains to be seen. I'm already in 15 minutes making this video, so we'll see what the remaining week has. If we get even more action this week, then I'll probably be making more videos. But until then, I'll just be posting updates on Facebook. And then so if you haven't been on Facebook yet, then it might be good to jump on there so you can get my updates as soon as I can put them up there. In any case, good luck to your trading this week. God bless to you all. Stay safe, and hope to see you in the next video.